Welcome to Optimal Insights, your weekly source for real-time rate data and expert capital markets commentary, brought to you by Optimal Blue. Let's dive in and help you maximize your profitability this week.
All right, welcome everybody. We are at the summit right now. It is Wednesday. We're about a little more than halfway through the summit. I've got Kevin and Vimi here with me.
Yeah.
We're having a good time. We're getting pretty jacked up for Wednesday. We've had a ton of great sessions, but several more sessions today, including the one we've been talking about every single week on the podcast. We've got Tony Hawk coming up here in about an hour.
Tony Hawk of legendary 900s skateboarder fame.
Yes.
So,
no, I've heard good things. You know, you get the question like, Tony Hawk, he's not a mortgage guy, but you know, typically at a conference like this, at any conference we've ever had, we don't typically have a celebrity speaker who's a mortgage person. I guess sadly there are not a ton of celebrity.
The overlap of celebrity and mortgage professional is a very small.
It would be, maybe 0 people. So,
well, depending on how this podcast goes, I mean, we might enter mortgage celebrity territory, right?
Ooh, good thought, Vimi. Good thought.
And then we'll be at like a pharmaceutical conference and we'll be speaking as celebrities.
Oh, yes. Yeah, exactly.
But we're really looking forward to that. Obviously, crazy successful person like Tony, who has had amazing success not only in skateboarding but just as an entrepreneur, right? Is obviously going to have some.
Yeah, and really anybody who's perfected their craft to the extent that he has, I think is going to have a lot of valuable lessons that are going to be transferable to a lot of different areas. So
sure, yeah. Just how do you overcome adversity? How do you get to the top of your profession, right, or any profession or in business. So looking forward to that later today.
Probably a good time for a disclaimer that as we prepare for Tony Hawk, there will be a lot of background noise and fun dance music. So for our audience out there, be prepared.
Yes,
Katy Perry's not here, but you're going to hear Katy Perry music during this podcast.
We're right in the thick of it. We're right in the middle of everything. So.
Let's see. Let's talk about a few of the announcements. Like we had some major announcements come out yesterday. You may have seen the press releases already.
7 product launches.
7 product launches. So we
lucky number 7.
Don't have time to talk about all of them on this podcast, but do go out there and check it out. You're going to hear from us again on the podcast going forward. But Kevin, what are your top few?
Yeah, so top few. I mean, it's first of all, I think it's just incredible that the teams kind of working behind the scenes have put so much effort into these product launches that we're so excited to announce 7 of them. I mean, that's just a big deal in and of itself. And if you want the full reading, as Jim mentioned, you can go check out the press releases that we put out yesterday. So my personal favorites, I think, are Ask Obi and Originator Assistant. Those are 2 of our new AI-powered features. So ever since Joe Tyrrell came on board in 2024, he's had a major focus on helping drive new AI capabilities within Optimal Blue. And we just, have been hitting the ground running and nose to the grind, turning this stuff out. So what are these products? So Ask Obi is our new standalone Optimal Blue AI executive assistant. So you can actually go to Ask OB and ask any question about your use of Optimal Blue across all of our suite of products and get targeted answers and analysis in a matter of seconds. So really powerful stuff. So if you're interested in just understanding how your volume is trending or understanding your overall profitability, how that's trending, seeing your drivers of profitability, which branches, which originators is that coming from, just basic information about concessions. Who's requesting concessions? What is the quantity of those concessions? So if you're an executive at an originator and you're just looking to get a better understanding of how your business is operating, or you just have these sort of quick hit questions that, it'd be great if I could get this information just back quickly. You don't need to have an analyst go out and go dig through reports and come back a day or a couple days later to get you the information that you're looking for. You can just log in, ask a question, and get your answer right away. So that, I think, is going to be very powerful, both plugged into the PPE side of the equation, also hedging and trading, really intended to be, cross-functional in terms of what it can do. So that is probably my number one, excited feature announcement.
I can see why. I mean, that's revolutionary, right? Especially for an industry like the mortgage industry that's typically, or at least traditionally, has been technologically behind. I mean, this is so advanced. And to your point, Kevin, launching 7 products at one time, pretty incredible.
It's a big deal. So Ask OB definitely up there. My other favorite is Originator Assistant, which is a PPE AI-based feature. So it's within the PPE. And it's really designed to help originators get the best terms for a borrower and eliminating bias along the way. So the way that this feature works is, when we run a search and we're looking at eligible products and pricing, we can get recommendations to slightly adjust the borrower's terms and either get a lower rate or a better price, which is huge. And not only do we have that capability, which is AI driven, but it's also on top of a lot of the originator features that we've been rolling out over the past few months that allow you to run multiple versions of a loan scenario and see the results side by side. And also, go into a what if mode for pricing where, you can have controls that are set to prevent data changes within the PPE, having those flow through the appropriate channels in the LOS, but still be able to view and quote pricing if you're adjusting those features. So just a lot of new flexibility and power given to originators in that deal structuring process. So trying to figure out what the best terms are going to be for the borrower. So, it kind of takes what used to be a manual process where maybe we do need to run through 6, 8 different versions of a loan scenario, looking at different products, just manually adjusting those scenario data points, where now we can get the results that we're looking for, the most optimized solution in a matter of seconds. So really cool stuff.
Yeah, it's an assistant, right? And that, like a lot of the features that we rolled out yesterday are assistants, right? They're not meant to replace people, but they're meant to make the process a lot faster, a lot cleaner, a lot more efficient, right? And same thing, we won't get into, again, all 7, but there are several, as you said, on the hedging and trading platform as well, where there are some processes that you have to do every day, for instance, like P&L recon. So I'll get a little nerdy here for a minute on the hedging and trading side. Day over day, you're going to have changes in your risk position, or you're going to have changes in the profitability of your position. And typically it takes an analyst, 30, 45 minutes to an hour, depending on how big those changes are and how deep you want to dig. Can take a lot of time of someone's day to do that. And now this assistant literally just, much like Ask OB, you're basically asking OB, why did my position change overnight? And the system will give you the top 5 reasons. Here's the first 200,000 was because of this. The second 50,000 was because of that. And it happens instantaneous, right? No one's spending time doing it, and you're not having to dig through spreadsheets to get there. And then there's another feature that suggests trades for you. Like hedging a position is not, it's not the most complicated thing in the world, but it is very important, and it can take some time to think through it and evaluate your options. And this trade assistant actually says, here's the trade we think you should do. But it's an assistant. You still can say, I disagree with you, robot.
Yeah.
But I appreciate your help.
You mean the robots aren't in charge just yet?
It's happening fast, so we are cautious about that. But so far, we still get to make the final decisions.
Yeah, I think that's a really great way to think about it, and think about all of this new technology is that, to your point, it's not replacing anybody. It's just simply empowering humans to be able to do things more quickly, do things that used to be multi-step or take a long time to do them much faster. But at the end of the day, the human is still in charge.
Yes, it is. It's wild that we have to differentiate pretty consistently between humans and AI.
Yeah.
All right. Anything else on that?
I think that's a pretty good overview, but yeah, definitely recommend taking a look at the press releases, see the full list of things that we're so excited to launch. And it's honestly, it's really cool in that it's only the beginning of February, and we're going to keep working on a lot of new innovation throughout 2025. So just the first step.
Yes. Okay. We had a ton of other great sessions along the way yesterday. We obviously didn't get to sit in on all of them, but got to sit on quite a few. We had our investor and GSE session yesterday, so we got to talk to some of the top aggregators in the industry, and as well as the GSEs to see what's going on there. And obviously a lot going on with the new administration, so there was a lot of talk about that. There's certainly going to be different trends going into this year.
Just a little bit of news in the couple days that we've been on site here.
Yeah, I mean, we had Mike Fratantoni, the chief economist at the MBA, had a huge session, a major session after lunch yesterday, and went through his economic update and what's going on with the housing market, and had to touch on the administration as well. And I took a few notes on this, but it was really a lot of what we've talked about on this podcast. Some of it is.
You think Mike is a listener to the podcast?
He mentioned he was a listener.
Wow.
What is he, a subscriber?
He's a subscriber. Well, what he said was he every day looks at the OB data. So shout out to Mike for that, and appreciate you, Mike and the MBA checking out our data. I think it very well complements the MBA data, which if you're not a subscriber of theirs, you should definitely spend some time there. They really do a really good job of forecasting out several years of volume at every level, purchase versus refi, and then they get into economic data as well. What's inflation going to look like? What are rates going to look like? Treasuries. So they have some really good information there too. But it very much mirrors a lot of what we talk about, and they have a lot of the same opinions going forward. And unfortunately, those opinions are fairly flat. I'd say was maybe the punchline of the whole.
Yeah.
The whole presentation was, where rates going to go in the next couple of years, and generally speaking, no matter who you ask, flat between 6% and 7%, I believe is what Mike said. That's the general range, and then treasuries, between 3.5 and 4.5.
Yep.
Volume, though, that's I think a good story in our industry that we were maybe taking for granted over the past couple of years. 2023 was the low point by all measurements, and 2024 was better than 23, and then 24 we actually saw at least 3/4 of lenders become profitable. So at that point, any volume increase becomes incremental profitability, right? Again, I think we would all love to see 2021 again, but here we are with probably a 15% increase in volume is what the MBA is predicting, and we had a pretty good January as an industry, so we're on our way there.
Yeah, it seems like, big story there is even though rates are sort of elevated and flat, that housing inventory kind of continues to rise, and that is, kind of driving more applications ultimately. So even the mortgage rate lock-in effect, is loosening a bit, starting to loosen a bit, and should continue as inventory is rising, because inventory is still in many parts of the country significantly below 2019 levels, which is obviously having a net negative impact on mortgage applications. But some bright spots there, even with or because of elevated rates, kind of driving a little bit more inventory and ultimately more mortgage apps, which we all like to see.
Yes. Mike mentioned that, home building is hopefully going to increase inventory, and that's where a bulk of the purchases are going to come from. But even existing homes, there should be some increases there as well. Like you said, it's folks are, again, they're in the mode of accepting that rates are going to be higher for longer. So the lock-in effect is starting to dwindle.
Right.
If you go back 2 years ago, people were hoping, rates are going to drop. All projections are for rates to drop. And by now, we should be in the 4% range, or at least the 4 handle, 4 to 5%, given what the projections were back then.
Right.
Didn't happen. Also, now the projections are we're going to be 6 or 7 until 2027. So people are starting to say, okay, we have too many kids now. We need to move into the bigger house. We have to relocate for my job.
At some level, it's just you can put off some of these decisions, I think, that have driven behavior over the last couple of years for only so long, and then it gets to a point where it's just it is what it is. Rates are what they are, and you start planning for that.
Right. And then there's refis.
Yeah.
Right. So we talk a lot about the debt cycle on this podcast, and Mike was highlighting it yesterday, where certainly, especially in the younger age ranges and some of the subprime areas, and then credit cards and car loans, those debt numbers are higher than they've ever been. The delinquency numbers are starting to tick up to above where they were in 2019 before the pandemic. And that's going to start bleeding over into mortgages, presumably, because it always does. We'll start with FHA, and then it'll move into conventional. And under the headline of the mortgage industry sometimes has to hope for bad things for good things to happen in the mortgage industry, typically what follows that is then rates go down because there's some sort of debt issue. We haven't hit that number yet. I mean, we still have $18 trillion worth of equity out there in homes. So hopefully what will happen this time around is there will just be more cash out refis as folks will get into a little bit of trouble with credit cards, car loans, and they'll start taking some of that record debt out of their homes. So we get those refi numbers up, and that will, again, supplement the increase in purchases. And, again, hopefully the mood is we have a good, decent year.
Yeah, and I know, Mike also had some other signs for hope as well. You're talking about just reflecting on the little boomlet that we had. He used the word boomlet, which I liked, in September, where, rates just dropped, went straight down to 6 and then, very quickly came back up. But offered a really great window for lenders who were in a position to be able to take advantage of it, right out of the gate, to refi a lot of the folks who had taken out apps or, bought homes in 2022, 2023, or earlier in 2024. And, you mentioned that it's likely, while the overall trend quarter to quarter, year to year will be flat for interest rates, there likely are going to be more opportunities like that where there might be some just whatever, pick your poison, news that comes out and, headwinds to the economy, international, news, whatever, where that, drops the treasury, significantly enough to allow mortgage rates to fall and offer the same window. Seems like those will be relatively short-lived overall, but if lenders are kind of thinking about that now, thinking about the macroeconomic environment, also honing in on what their recapture or refi strategy is going to be, that's something that we talked about in some of the sessions yesterday. You're going to be much better prepared to hit the ground running on day 1 and not day 8, and to make sure that you're winning that recapture strategy with your borrowers.
For sure. In fact, I remember when we launched this podcast around the time of the last mini refi wave, what we were calling it, and that was a big part of our sessions too. Yeah. It was make sure you have technology in place so that you can take it the second that those rates drop, that you're out there gunning for your borrowers because everyone else is. So you need technology in order to stay on top of it.
Yes, yeah. And so one piece of technology that we highlighted is Capture. So our tool Capture allows lenders to run either their servicing portfolio or bulk leads or prior relationships in bulk to identify where there might be a refi opportunity. And you really need something like that to take a bulk perspective and not just think about individual loan by loan. Who can I reach out to and refi? One other thing that I'll highlight too is it's not just about waiting for that moment to when rates drop to go reach out to your borrowers. It's staying in touch along the way too. So it's you don't want to forget about them as soon as you close a loan, and then 6 months later you reach back out. If you have a strategy along the way to make sure that they're keeping you in mind, so that they're thinking of you when they're seeing that rates drop. That's going to put lenders in a much better position to be able to take advantage of that refi window.
Right. You need to be a lot more surgical rather than shotgun approach. And you may only have a brief period of time like we did last summer to refi those borrowers. So you need to focus on the top prospects rather than the million borrowers you have in your portfolio.
Yep, exactly. So a little bit of, signs of hope there amongst, what continues to be a challenging market. But I thought it was really, Mike had a really good session overall. I think he does a really good job of, breaking the data down into ways that, everyone can understand, and also just telling a really interesting story with it.
Yeah, absolutely. Definitely. Very lucky to have him participate.
Yeah,
it was a lot of fun. And we right after his session, I actually interviewed Sasha Hewlett from the MBA. So she's the AVP. She's the chairperson of the Secondary and Capital Markets Committee. So they, they're out there listening. They're out there paying attention to policy, right? So there's the policy side of all of this, what's going to happen this year. And they obviously have a lot of things to focus on, a lot of things to watch out for, but even though there's a lot of uncertainty right now. And Mike mentioned some of the things, but then it bled into that session where we talked about for instance, I believe it was just yesterday, the CFPB head was ousted. So now I think the head of the Treasury is going to take over the CFPB, maybe.
CBD.
Yeah.
Interesting times.
Yeah. And the CFPB is going to, I guess we don't know yet, is going to stop doing what they're doing. That may not mean that any rules go away, but basically like some of the other executive orders that have come down recently, I think they're just going to pause, resituate, and we figure out what the CFPB looks like here in 30, 40 days.
Yeah, it's just a very interesting time because, I'm sure a lot of lenders might feel a little bit relieved, particularly with just, some of the more nuanced regulations to try and stay on top of, and just the specter of overall having a more forceful CFPB in place. I'm sure that there are, reasonably some folks out there who are a little relieved. One of the things that I keep thinking about too is, at the end of the day, there's a lot of politics that's involved in this. And so what happens if, let's say, states come in and try and fill that void, in the absence of national regulation? Obviously, that would make things a lot more challenging if you have lenders who are out there, trying to stay on top of state-specific, regulations of, let's say California or New York, start to come in with their own enforcements of, mortgage origination, and so it's definitely a lot of different ways that this could play out. Something that I think we'll all stay on top of pretty well, and likely be talking about some of the developments in the podcast, and ultimately with the goal of just trying to help folks stay a little bit more informed around what's happening and what are some of the things that could happen as we're sort of entering this new era of more unpredictable regulation or more unpredictable absence of regulation.
Yeah, and it's interesting because during my panel that I hosted yesterday, all things MSR, I was lucky enough to have 3 wonderful participants, and I asked a question, of course, about regulations and how do you think the current administration is going to impact MSR, and one of my panelists took the mic and just handed it to the next person. And, I looked at him and I said, I don't blame you. I mean, it's a really challenging question to answer. I think, we did circle back and we came up with respect to how regulation will change servicing. I mean, very likely the deregulation that we all speculate will happen will shift servicing away just from the IMBs a little bit more over into banks, right? Because they're going to have a lot less requirements. And so that will be interesting to see how that plays out in terms of retention strategies, as well as how that impacts MSR pricing too.
Yeah, sure. Yeah, and then there's tariffs, right? And then I think Mike had a similar reaction, basically hanging the mic. He basically said, I don't know what to tell you.
Yeah.
Tariffs, things have changed in the last 3 days, where it does seem a little bit like we've talked with Ben and Alex about how tariffs could very well just be used for a tactic to bring other countries to the table to have discussions about other issues, whether it's fentanyl or it's immigration or taxes. Like, it seems to be what's happening right now. Yeah. As opposed to just, you're going to pay 20% of tariff and I'm going to walk away from the situation, right?
Right.
But also there's so much uncertainty there that we're in a situation where we're going to have podcasts topics for the next 4 years at least.
We'll have a full plate just talking about the week's news. Yes, it seems like. But.
Speaking of the MSR panel, so that's always one of my favorite ones for us to have at any kind of event, and we do have all the top MSR brokers at these events. Like, what were some other highlights of that session?
Yeah, so to your point, we always have gentlemen from Citus and Phoenix, which we're so lucky to have because they provide such valuable insight. And then we always love to have the buyer perspective too. So we had someone from Seneca on, and it really provides this very well-rounded look into what's happening in the MSR market. There is that music I was referring to earlier.
Get ready for Tony Hawk.
Not quite time to break out into dance yet. But so another interesting topic. So of course, it might have been unfair of me to ask about the political landscape and how that changes MSR. But given the focus of this summit and how excited we are at Optimal Blue for all things AI, I asked the gentlemen what they thought about how AI is going to impact servicing. And I'm sure we can all think of some very obvious ways. But 2 takeaways were that the cost of servicing will certainly decrease. So it'll be easier to retain servicing from that standpoint too, all else equal. In fact, someone even quoted that it could get as little as $6 per loan, which is pretty incredible as a base cost.
Right. What's the average right now, do you think?
Probably more like 20 to 30.
That's wild.
Yeah. And of course, that's very product dependent. So that's just kind of an average number. But so that was interesting. And then, the other point, and we kind of touched upon this a little earlier with respect to AI and robots, but, so as an MSR valuation, the brokers or someone who's valuing their MSR, they attribute value to late fee income. And what this is when a borrower goes delinquent, they get charged the late fee, like we all do, right, for credit cards or whatever it might be. And I don't know about you guys, I, by accident, have missed a payment on my credit card, and I've called into customer service and sweet talked myself out.
Auto pay setup.
Sweet talked my way outside of paying the late fee charge. They credit my statement. So, the same thing, of course, happens in the mortgage industry. But if we now move away from calling into customer service and you're using AI and a chat bot, you're not as likely to be able to get away with
Yeah,
that.
sweet talk. See, what's the tolerance of a robot for sweet talk?
Exactly. That would be very interesting to explore. I mean, we might have to do some research on that. Come back to you guys in another session with our findings. But so that was interesting. Or then even a very recent example that we also talked about a couple of weeks ago, how easy it is for those that were impacted by the California wildfires to get forbearance. They call, it's very simple, and then they get this forbearance plan that's really critical for them right now. But would AI be able to grant forbearance as easily? Because you have to have the exact combination of words, that are programmed in order to get that forbearance. So overall, I think it's a great thing, of course, reduce costs. That's what we're all hoping to get from AI. But, there are these other considerations.
Right.
Yeah, I think that's really good points to bring up. It's a very, very complex landscape, and it sort of, I think highlights how, while AI is transforming not just the mortgage industry or, servicing or origination, a lot of the kind of, end goals, where we end up is still somewhat unpredictable given where we are now. We can see how things are changing, but at the end of the day, where do they end up once, AI has sort of reached its conclusion and, proliferated sort of every area that it can add value? What does that look like? So very, very interesting times. Definitely just an overall topic that if you really want to understand how things are changing and how they could change, you got to be glued into folks who are providing this sort of analysis so you can stay up to date. Even in the last couple of weeks or months, there's been major AI announcements that have really shaken things up. We've talked about some of that obviously in our podcast. Have a hot take or two on those.
Yes, you do.
My hot takes are about 50-50, so we'll see how they play out. But overall, it's just something that I think anybody in any industry right now needs to stay focused on because it's changing so rapidly and the impacts are so great.
Very good point. Very good way to kind of summarize all of that and what we're looking forward to at OB, but also just across the world. What is the trajectory of AI? What does it get used for? And right now we've applied it in some very practical places, and it seems like that's ChatGPT helping you write emails. Like that's how AI is advertised right now, is how can we make a very simple application for a large language model, and that's what we're doing.
Yep.
We're doing with our technology. Okay, again, there are so many sessions at this event, too many to talk about today. We have a few more again. We got Tony Hawk. We will have. We're going to meet with some broker dealers later. Have some spirited discussion with them, and some other in case you missed it sessions that are going to summarize some things that happened yesterday.
Yep.
But otherwise, I don't know. What was your favorite thing about this conference? It doesn't have to be a session. Just what did you? I always ask people on the way home. What did you enjoy the most about the conference?
I would say the networking for sure, right? And I think that that's consistent among all participants, whether you're here, as hosts or as clients. Clients love the opportunity to chat with other clients and say, okay, what are you doing, right? What problems are you facing? How are you solving them?
It sort of also kind of emphasizes the power of the Optimal Blue network because you come to an event like this and you have such a wide variety of folks to be able to engage, share those sort of best practices, folks who are, small size, mid size, large size, IMBs, banks, credit unions, everybody, find somebody that's, you could learn from and, share best practices with and maybe they could learn from you as well. So really great opportunity there. I'm sure.
Yeah, we had a great event last night out on the terrace where everybody got together, and that's a lot of what clients will say. They're like, "Man, I've met like 18 clients of yours that I've never met before. We use the same technology and just collaborating like that. Just how are you using it? How are you implementing it? How many people do you need to manage this kind of feature? Are you using this new, are you using auto lock? Are you using Compass Edge?" So I would agree. I guess I steal yours, or I'll say, some of the areas around the conference where you can network. We have the Blueprint Zone right outside this room here, which is all day between sessions. There were folks that were congregating around there. They may have heard something about a feature in a session, and they said, "I want to dig deeper." Right, so they go to the Blueprint Zone, and we have our product people there. We have some folks from sales, folks from the desk. They're able to help them, like literally walk them through it on a screen and let them touch the buttons. And yeah.
I think for me, being in product development, I always love just getting feedback directly from users. It's one thing for, our teams to, put something together, but actually to unveil it to customers, to get it in their hands, to get real feedback on it is invaluable. And then also just feedback in terms of what's important for our lenders. Even if it's critical feedback, we love hearing any type of feedback and making sure that feedback gets incorporated into our roadmap. So really, it's been I've encouraged anyone to share your feedback with me about how your use of Optimal Blue is going. What are things that you really like about Optimal Blue, and what are some things that you would like us to work on in the future? It's really great conversations come out of that, and that kind of drives home the message of ultimately we're working for all of our customers that are here. This is what we're trying to do. We're trying to empower them to be more efficient. We're trying to support their overall profitability so that they can continue helping borrowers achieve the dream of home ownership. And we play that important role in the overall process. We're not the end all be all, but we play a very crucial role in that process. And ultimately what we do is all about the folks who come to these conferences and show up and who we engage with here. So it's been really cool. It's always a great opportunity to have this many folks come together and be able to share feedback.
Right.
In fact, I'm sure a lot of the suggestions that we're receiving from our clients today will be showcased at our next summit.
Yes.
TV.
So this is where you help shape what we launch for 2026. And who knows? So we launched 7 this year. Maybe just double that next year, right?
It could become exponential from there. Yeah, and can't forget the UX wall too. So that's another area where people have given feedback this week. Is right next to the Blueprint Zone. There's literally a wall with sticky notes, and you can write down like I have a suggestion. Yeah. It's the modern version of a suggestion box for OB.
Yeah.
All right. Anything else, team?
It's a great recap. Yeah.
And I'm kind of getting FOMO.
I know.
Get out there.
It's time to get back out there.
All right. Well, thank you, Kevin.
Yeah.
Thank you, Vimi. Thanks everybody for listening and watching. And we'll see you out there.
Thank you.
Great.